You are listening to The Vocal Technologist. Spoken tech for your ears.
All right, hello and welcome back. I'm your host from The Vocal Technologist, and I have to be honest, I've completely lost track of what day it is.
Tell me about it.
My calendar insists it's Friday, January 30th, 2026, but the energy, the sheer chaos out there, it just feels like a permanent Web3 Wednesday.
It really does. It's become a state of mind at this point, not a day of the week.
Exactly. So let's just embrace it. How are things on your end?
I'm doing well, though. I mean, trying to keep up with the news this week has been like trying to drink from a fire hose.
Right.
You blink and, a new regulatory bill drops or some piece of software literally invents its own economy.
It's wild.
That is the perfect place to start. I mean, we are looking at a week where tariffs over Greenland. Yes, Greenland are tanking Bitcoin prices. And at the exact same time, AI agents are writing their own code to launch meme coins on Solana. If that isn't the definition of the future is weird, I don't know what is. It's such a study in contrasts, isn't it? You have this old school geopolitical trade war colliding with the absolute bleeding edge of autonomous software.
So messy.
It's very messy, but that's usually where you find the interesting stuff.
Well, that's our mission today then. Let's try to cut through it all and see how the machinery of the future is actually being bolted together, from Wall Street all the way to Bermuda.
And it's not just about the price charts. It's about the plumbing, the infrastructure that's being laid down while everyone's distracted by the numbers.
Okay, let's get right into it then. And we have to start with that macro story because it's just kind of funny if it wasn't so painful for my portfolio.
Uh-oh. Bitcoin
took a nosedive, right? Slipped below 92.5. And the story is we can blame Greenland. I mean, come on. Since when does a spat over an island of 56,000 people crash a $1 trillion asset?
It sounds completely absurd on the surface, doesn't it?
It really does.
But you have to look at what Greenland represents here. It's not about the ice. It's about shipping lanes, strategic positioning between the U.S. and the EU.
Okay.
So when the market heard that, the algos, the high-frequency trading bots, they didn't see Greenland. They saw trade war. It was a massive risk-off signal.
So despite all the talk about digital gold, it's still just acting like a tech stock. The NASDAQ sneezes and Bitcoin gets pneumonia.
Precisely. We're not decoupled yet. And that liquidation cascade, that $750 million wipeout, that happened because the market was just so over-leveraged.
So many people betting on a straight line up.
Exactly. Traders borrowing money to amplify their bets, the tariff news hits, the bots sell, then the humans panic sell, and all that leverage just gets flushed out.
Can you just break down that liquidation cascade for a second? I feel like we hear that term all the time, but what's actually happening under the hood?
Sure. So imagine you put down $10 to bet on, say, $100 worth of Bitcoin.
Okay, I'm leveraged.
Right. If Bitcoin drops just 10%, poof, your $10 is gone, wiped out. The exchange automatically sells your position to cover the loan.
And that sale pushes the price down more.
That sale pushes the price down, which triggers the next guy's automatic sale, which triggers the next guy's. It's a chain reaction.
A domino effect.
A complete domino effect. So while Bitcoin might be a sovereign asset in theory, in practice, it behaves like a really high-risk tech stock when the macro world gets nervous.
It definitely felt like a panic. But, okay, while the markets are freaking out, the regulatory picture here in the U.S. is getting interesting.
Spicy is the word I'd use.
Yeah. We've got President Trump pushing hard for this crypto market structure bill. He's at Davos saying he wants the U.S. to be the crypto capital of the world.
The rhetoric is definitely bullish, no doubt.
Yeah.
But the reality, in the legislative trenches, it's much, much messier.
How so?
There's a major conflict brewing. Insiders are calling it the yield spat.
The yield spat. Sounds like a terrible indie band. What's the fight about?
It's threatening the Clarity Act, which is a really important bill. Basically, the White House and big players like Coinbase are at odds over stablecoins.
Over what specifically?
The core question is this. If I hold a digital dollar, a stablecoin, should I be able to earn yield or interest on it?
Right. I mean, if I hold $1 in a savings account, I get paid interest. Why should a blockchain dollar be any different?
Because of how we define a security. That is the multi-billion-dollar question. The regulators and banks argue that if a stablecoin pays you interest, it's not just money anymore.
It's an investment.
It's an investment contract. It's basically an unregistered mutual fund in their eyes.
Which puts a company like Coinbase in an impossible position. If they don't offer yield, their customers will just go offshore to someone who does.
But if they do offer yield, the SEC is going to sue them into oblivion for selling unregistered securities. Yeah. And Coinbase is reportedly so concerned about this that they're thinking of pulling their support for the entire bill. We're talking about a business line that could be worth over $1 billion to them next year. They can't just give that up.
So while the U.S. is stuck arguing over interest payments, the rest of the world is just using this stuff. I saw that Olympic report on Iran this week. That was eye-opening.
Yes, that is a perfect example of the geopolitical double-edged sword here.
Yeah.
The report found that Iran's central bank has been buying huge amounts of Tether USDT.
I saw the numbers. Something like over $500 million in USDT to prop up their own currency, the real. That is just wild to me.
It is a sanctioned central bank using a crypto dollar issued by a private company to fight inflation and settle trade deals.
It really shows the two sides of the coin, so to speak.
Exactly. On one hand, it lets them completely bypass traditional banking sanctions. They don't need SWIFT, they just need an internet connection.
But on the other hand,
and this is the big gotcha, it leaves an undeniable permanent on-chain paper trail.
Okay, I want to dig into that. How did Elliptic even find this out? Isn't crypto supposed to be anonymous?
That is probably the biggest misconception out there. It's pseudonymous, not anonymous.
What?
Elliptic figured out that Iran was using what they call nested exchanges. These are smaller, often unregulated platforms that open up accounts at the giant exchanges, like a Binance, to get access to all their liquidity.
So they're like a Russian nesting doll of crypto accounts, hiding inside each other.
That's a great way to put it. But because every single transaction is on a public ledger, analytics firms can map the flow of funds. They see the wallets, they trace the hops, they identify the patterns. Cash leaves no fingerprints. Tether leaves a permanent public record. So it gives them access, but not invisibility.
You can run, but you can't hide on the blockchain.
Okay, let's pivot from governments to Wall Street, because the suits are making some big moves. The New York Stock Exchange, the NYSE itself, announced they're developing a platform for trading tokenized securities. This is a huge, huge signal. The NYSE is owned by ICE. They aren't some startup trying to disrupt the system. They are the system. They're the plumbing.
And they're building for 2047 trading, instant settlement, using stablecoins.
All of it.
But, okay, I have to play devil's advocate. I saw some people calling this vaporware. The announcement was pretty light on details. You know, no mention of which blockchain, what the fees are. Is this just a press release?
It's a fair criticism, and that skepticism is healthy. We've seen this before. But you have to look at the why. Why would the NYSE do this? It's not because they think crypto is cool.
It's about efficiency.
It's all about capital efficiency.
Okay, so strip away the jargon for me. Why does 2047 trading or tokenization actually matter? I can already buy stocks on my phone whenever I want.
Well, you can place an order whenever you want, but the trade itself doesn't actually settle for 2 days. We call it T+2. And in that 48-hour gap, there's risk. The risk that the other guy goes bankrupt before he pays you. And to insure against that risk, you need huge amounts of collateral just sitting in a clearinghouse doing nothing.
So is billions of dollars stuck in a waiting room?
Trillions, actually. Trillions of dollars trapped in the pipes. If the NYSE can move to a blockchain, settlement becomes T+0, it's instant. The moment you trade, the asset moves.
And that frees up all that trapped capital.
That frees up trillions, and that's why these guys are interested. Not because of ideology, but because of capital efficiency. It's just a better operating system for money.
That makes a ton of sense. And speaking of upgrades, let's talk about where this is actually being used by, regular people. Let's talk about Bermuda. Sounds like they're living in 2030 over there.
Bermuda is a fascinating little test lab. They're partnering with Coinbase and Circle to basically build an on-chain economy from the ground up.
And you can pay your taxes in stablecoins now.
Taxes, government services, yeah. They're integrating USDC for local merchants across the island. The goal is to make digital dollar payments just a normal part of daily life. It gets rid of all the friction.
It's the dream. And it's not just tiny islands, right? I saw Revolut is going for a banking license in Peru.
Yeah, and that's a huge play for the remittance market. We're talking almost $5 billion a year in Peru alone.
Wow.
That's all people working abroad sending money home to their families. And right now, they get killed on fees from services like Western Union. Revolut sees that stablecoins are just faster and way, way cheaper than the old SWIFT network.
And the numbers back this up.
Huh.
Visa, of all companies, is reporting over $3.5 billion in annualized volume on their stablecoin-linked cards.
That number is just staggering. And you can see the shift happening, right? We're moving from just holding crypto, waiting for the price to go up, to actually spending it.
Right.
In India, people are using crypto for credit. In Argentina, where inflation is just a constant nightmare, they're using stablecoin debit cards to hold dollars until the very second they need to buy groceries.
It's a survival tool in one place and a credit tool in another. Love that. Okay, let's get technical for a minute because there's a big fight brewing in the infrastructure layer. The tech wars, Ethereum versus Solana.
I'd say it's less of a war and more of a philosophical split. Ethereum is actually hitting record numbers. Throughput just hit 2.5 million gas per second.
And the fees are super low.
Yeah, like 15 cents. Historically cheap. I remember paying $50 for a failed transaction. It was awful.
We all do. Painful memories.
And Vitalik, Ethereum's founder, just put out his 2026 roadmap. And it's all about simplicity and garbage collection.
Garbage collection. That sounds like something I'm supposed to do on Thursdays, not a tech roadmap.
Whoa. In software, it's critical. He wants to reduce the complexity, get rid of old code, and just make the network durable enough to last for a century. It's about hardening the foundation.
Meanwhile, Solana is just grabbing all the developers.
They are. They've captured something like 22% of new devs coming into the space versus 16% for Ethereum. It's the first time anyone has really challenged ETH's dominance on talent since, like, 2016.
And a lot of that seems to be driven by this bizarre crossover with AI.
Oh, yeah.
Okay, this is where it gets really weird. My favorite story of the week. Ralph Wiggum.
Yes, Ralph Wiggum.
And to be clear, we're not talking about the Simpsons character. We're talking about an AI agent, a piece of software that launched its own crypto token on Solana.
That's right. It's a plugin for an AI coding assistant called Claude Code. And the AI, for all intents and purposes, deployed its own token.
I need to wrap my head around this. When you say the AI launched it, do you mean it just wrote the code for a human?
It wrote the code and it deployed it. A human gave it the initial prompt, sure, but the AI wrote the smart contract, pushed it live to the chain, and this is the critical part, it controls the private keys.
Wait, so we have non-human things that have bank accounts now. How does that even work?
They're called MPC wallets, multi-party computation. It lets the AI sign a transaction without any single human holding the key.
Wow.
This fundamentally changes things. To participate in the economy, you used to need a heartbeat or a corporate charter. Now, you just need code.
That is both incredible and absolutely terrifying.
Yeah.
I mean, if an AI rug pulls a project, who do you sue? The AI.
That is the legal black hole we are staring into right now. And it's not just launching tokens. These agents are becoming economic actors. They can hold funds, they can trade. We're seeing them move into prediction markets.
Right.
And AI can process way more data than a human, so it can price risk in those thin markets much more effectively than we can.
Speaking of which, didn't Portugal just block Polymarket?
They did. Regulators are pushing back, calling it unauthorized gambling. It's that classic fight between permissionless tech and national laws.
Yeah.
But what happens when the players are just AI agents betting against other AI agents? How do you regulate that?
That's a problem for a lawyer in 2030 to interrogate.
Yes.
I want to hit one last thing. The social side of this.
Yeah.
Some sad news for the decentralized social fans. Farcaster got acquired.
Yeah. Naynar, an infrastructure company, bought them after the founders stepped back. It's a bit of a sobering moment. They had all the hype, raised a ton of money, but building a social network from scratch is just so hard.
The infrastructure company won out over the actual social protocol.
It seems so. And, you know, Vitalik had some thoughts this week that kind of apply here. He wrote about convex versus concave dispositions.
Okay, what's that?
It's one of those ideas that once you hear it, you see it everywhere. He says, we approach decisions in two ways. Convex is the all-or-nothing approach.
Like a fortress.
Exactly. Rigid, uncompromising. That's Bitcoin's philosophy. It rejects change to maximize security. Not your keys, not your coins, zero compromise.
Okay, so it's concave.
Concave is about compromise and trade-offs. It's a suspension bridge. It flexes, it sways a bit, it trades some rigidity for more utility. That's more like Ethereum.
I see.
And Vitalik's point is that most real-world problems aren't one or the other. They're saddle points. You have to know when to be a purist and when you need to compromise.
That applies to literally everything.
It really does. And maybe the Farcaster situation is an example. Maybe they were too convex, too purist about decentralization. And what users actually wanted was a bridge, something easier to use, even if it was a little less pure.
Ideological purity makes for a great manifesto, but a terrible product. That's a really good lesson. So let me try to recap this. This absolute chaos.
Go for it.
We have the Prime Minister of Greenland somehow crashing my Bitcoin. We have Wall Street trying to tokenize the entire stock market to free up capital. And we have AI agents named after cartoon characters launching their own economies on Solana with wallets that no human controls.
It is messy. It's volatile. But you can see a new financial nervous system being built in real time. The fact that Revolut can send money to Peru instantly, or Bermuda can take taxes in USDC, that shows the utility is finally catching up to the hype.
It's growing pains.
Yeah.
Very loud, very expensive growing pains.
Indeed. And it raises a really important question for all of us, I think.
And that's that.
If these AI agents are starting to hold wallets and execute trades and launch tokens on their own, at what point does the economy stop being something humans do with each other and start being something that software does to us? Are we still the players, or are we just becoming the liquidity for the machines?
Oof, that is... I'm going to need to sit with that one for a while. Maybe I'll ask my AI assistant what it thinks if it isn't too busy trading meme coins behind my back.
Just make sure it doesn't have your bank password.
Solid advice. All right, that's all the time we have for this week. Thanks for tuning in to this wonderful slice of the future.
Always a pleasure.
Keep your private keys safe and your mind open. We will catch you next time.
Spoken Tech for your ears.